Hey, good morning. Let's go over today's trade plan. So in the overnight session, we saw that ES failed at yesterday's initial resistance zone of 54.75 to 56.75 and then balanced within a range above 32 to 34 and is now breaking and holding below that area. So heading into the open, if ES is holding below 32 to 34, that would be a confirmation of the sell side in firm control, and that can lead to a test of yesterday's low at the 21.75 to 23/4 support, and even a break and a test of the lower support areas at 18.11 to 18.13 and potentially 18.04/4 to 18.05/4. So that's something we'll have to gauge in real time just to determine the level of weakness we're seeing and the level of downside momentum we're seeing. And ideally, we'd like to see the other markets continue to participate in the downside action. But right now, we know that the bias is bearish across multiple time frames, and even a break back above 32 to 34 would not necessarily change that slightly bigger picture bias, but it would just tell us that short term there's a failed breakdown attempt which can lead to a test of 37.5 to 39.5, and then a breakout above 37.5, 39.5 could lead to a test of 44.5 to 45.5 and potentially 52.5 to 55.5. 56.75 marks the upper edge of the current developing range and developing balance area. So as long as we're holding below initial resistance, technically we're still in a short-term bearish balance. And for that reason, even if the market breaks above 32 to 34, we can still get responsive sellers active at the resistance zones above, and we can still get follow through on the downside. But holding below 32 to 34 would be a confirmation that the sellers are in firm control, even on the smaller time frames, and that can lead to continuation into at least the 21.75, 23/4, and very likely into the lower support zones as well. So how the market behaves at 32 to 34 is going to provide us a bit of a heads up and help us establish the very small time frame bias. But bigger picture, the bias continues to be bearish. Keep an eye on the other markets to see if they are indeed breaking and heading lower. Russell, keep an eye at the 952 area. See if it breaks it. It's essentially testing yesterday's low, and if it can break and hold below that, then that would be another confirmation that ES can also test some lower prices. But because all these markets are at larger time frame support, mainly NQ and TF more than ES, if those markets start turning around in a big way, or we start seeing some better momentum and buying in those markets, then ES can stabilize as well. But we would have to see something significant in order to switch our bias to more neutral. But below 32 to 34 in the S&P, and as long as the other markets are also maintaining lower prices, we can certainly stick with the bearish bias and look for a move down into the lower support areas, at which point responsive buyers could be active, especially if we start tagging some of those zones below 1804, like 92.5 to 95, and then we have strong support on the larger time frame at 76/4 to 79.75 and 17.74. Not an area that has to be tagged today, but if we break below 1804, then that's the next major area of support. Responsive buyers can be active at the zones ahead of it, just based on the range being exhausted on the day time frame. But the strong support after 1804 is going to be down at 17.76/4 to 79.75 and 17.74. So let's keep an eye on this 1832 to 34 here heading into the open. That'll help set the tone a bit, but keep in mind that overall we're still going to be in a bearish balance as long as we're holding below 56.75 and below the initial resistance zone, so sell side can be active at the resistance zones above. Those are our main thoughts heading into the open. The focus will remain more on short side, and we'll take it from there.